Hey guys, welcome to the DSuite, the latest from Dorsey Intel. Glad you guys can join me today, and I hope you'll stick around for the full whirlwind tour of what I like to call the market gunship for the everyday investor. So what do we have here? We have the main DSuite graph, basically, which is giving you several different systems all over time, basically the last quarter, 63 trading days, and with the main scale over here being the S&P and its analogs or equivalents. So kind of your main track here is the S&P in dark blue. This allows you to look at key lows, key highs, just get a good reference background for what levels the S&P has been at over the last 3 months. In light green here, we have the seasonality, which is going to range from basically 1 to -1, or 0 to 100%, whichever way is easier for you to envision it. But either way, you see your very strong sort of Santa Claus seasonality typically during December, and then it drops off to be very weak in the first month of the year, January, and then proceeds to slowly trend back up. So that seasonality can be very useful, but the only way to really make it useful is to look at rolling correlation, in this case the last 21 days or 1 month, and just looking at that correlation between the S&P at any given time and the expected seasonality. And if you're up here in the higher range, say above 0.5 up to 1, it's a stronger correlation, especially if that trend is rising up. And conversely, if the trend is falling, the correlation has been weakening and can even go negative for a certain amount of time. In addition, we have our actual strongest historical analogs here. Going from number 1 ranked, the strongest 21-day, 1-month historical correlation with the last 1 month price action in the S&P 500. So that's going to be over here in gold. We can see the last weeks are basically matched up and normalized. And then according to whichever analog is in the lead, whether on it's number 1, which is 1966 currently, or number 2 in silver, looks like 2003, and number 3 bronze, 1973. So over the next 3 to 4 weeks, we have a full projection based on that historical price action. And then in bold red here, we have the top analog or temporal analog composite, the TAC. And this is a rank weighted average of those top 3 composites plus A5 here, which is our more short-term tactical swing trading system, which is looking much more bearish right now, but we'll get into that in a little bit here. So essentially, you have your top 3, and red is giving you your average target. So price action may oscillate around that, but it gives you a good idea of the general trend, which is looking mildly bearish up to the upper 1900s right now into early March. So look for some kind of a significant high there. But other than that, that's where all the systems come together inside of the DSuite on the Suite tab. Diving into the guts of the DSuite here, we're on the C3 tab, and this is really just giving us a sliced tabular view of those top, not just 3 analogs in gold, silver, and bronze, but also numbers 4 and 5 over here. So these are the 5 strongest analogs. In column D here, we actually see what the 21-day basic correlation is between that most recent price action in the S&P and these different historical analogs, whether it's 96, 2003, 73, 03. That is how strong that current correlation is right now. And as you can see, these are actually conditionally formatted to show us the significance of that correlation. And actually, most of the time, we want our correlations to be high, 0.9 or higher. And right now, even number 1 is at a 0.87. So that's actually a key caveat on this system, is even though you may have a top 1 through 5 analog, if their correlation isn't high enough, you should look at these very skeptically. In fact, the further below 0.875 or even 0.85 being a danger threshold, the more volatility you can expect. So as an example, if for some reason we had a greater lock, a better lock with a correlation of say 0.93, there we go. The system would recognize that that is what we want. Our rank weighted mean, which is kind of like the TAC, the temporal analog composite, in that it actually does a rank weighted average of these top 5 analogs with, just to put things in perspective, a rank of, or a weight of 13 or 8 depending on the circumstances for the number 1 rank, all the way down to a weight of just 1 for number 5 rank. So rank weighted mean gives us that mashup. And then our next key metrics here to look at are our forward performance. So this is saying, okay, if our top analog is 1996, 3 days later we saw S&P up a whopping 1.79%. 5 days later, same thing, up almost 1.8%. 10 days, 2 weeks later, up over 2%, and 15 days, 3 weeks later, up over 3.28%. So that is our expected performance if S&P were just to happen to match that analog over time. I'll go back to our actual indication. However, if the correlation is too low, as we're seeing here, dropping below 0.875, the rank weighted mean will go into a danger state. And in fact, if our correlation drops low enough, say 0.8, we'll be all the way in sort of a red alert condition. So whenever you see these, be on your guard. If you are not in a all clear or just neutral black background situation. The nice thing is with this system, it will automatically handicap these rank weighted means to introduce more volatility in the equation, which can make a big difference. You see the 3-day forward forecast currently could be up to, or 3 weeks, sorry, forward forecast could be up to 8% discount on the S&P if these correlations don't come up over the next few days. And we also have our past top 5 caching here. So this would be the caching for 218, the last trading day, before the current trading day, 217, 216, 212, and 11. So basically the last 5 trading days, what were the top 5 historical analogs? And you can see that these can slowly change over time, but it's not uncommon to see one particular analog stick in there for a good 3 to 5 days before slowly falling off as we've seen this December analog. And this 96 analog, meanwhile, has been fluctuating, but it looks like it's actually climbed up toward the top and is currently the number 1.